So let's talk about the markets and why we don't predict where it's going to go and how we interpret what it's doing at that moment.
Yeah, I think really this last year, in so many ways, is a perfect example of that. Just think back a year ago, when we started 2023, uh, where everyone, all the experts out there, and everyone, myself included, everyone knew that a recession was going to happen, right? And of course, what does the market do? It did the exact opposite. The market has had this great rally. Yes, it was more narrow at that time, but in the end, I mean, it was pretty fascinating to watch it throughout most of 2023 because you still saw a lot of very smart people out there digging their feet in, saying, "Nope, we're still going to have a recession. This is just a bear market rally. This is all going to collapse," and they had thousand reasons why, and they're all very sound, logical reasons. But in the end, the market's going to do what it wants to do, and that's when those are just one of those many lessons that we've learned from Bill. Happy birthday, Bill. I mean, it was on Monday, his birthday, and uh, I just remember, Scott, like when we would go to Scott and I we would beg to go to the master's programs when Bill O'Neill did it, like 14 years, right? It was 2010 we went to the first one together,
That
right?
was the
But
first one for me. Yeah, I
yeah,
think
we were
you had been as
I
a
went actually as a customer too, but
yeah.
we were like begging to go, and I mean, this is on weekends, like 2 days weekends, and here we are, Scott and I were like, we want to spend our weekend, listening to Bill go, and everyone else thought we were crazy, but and we were so I still remember how excited we were, but Bill was he kept emphasizing all these seminars that we had an opportunity to go and listen to him. The market is always right. Yeah, every other thing is your opinion. Opinions don't matter in the market. The market is always right. And so when we got that follow through day in the early January 2023, when you saw some stocks working and all this kind of stuff, you know, the market was telling you to start putting some money to work, right? To start changing your mindset and listen to it and go with the trend at that point. Maybe you don't have to be that aggressive or anything, but to listen to the market and not to listen to everyone else's opinion, including yours, because things were looking pretty bad at that point. And it's very normal and very human to be very emotional at that point and be fearful. Why would I want to put it when everyone's going to be losing their jobs? Housing's going to collapse. Banks are going. I remember I mean, that was terrifying. It was a year ago, right? Where all the banks, I mean, the regional banks and what Silicon Valley Bank was going on, and there had the bank run on it. I mean, and what First Republic. I mean, it's terrifying at that time. Um, but the market was able to hold, and then you got another fall through day. You started seeing more stocks break out and more momentum coming in, and in the end, the market is right. It didn't matter. And that was a tremendous lesson.
Yeah, it's one of my favorite quotes, and it's not me. It's just one of the many quotes that I've stolen from somebody is 27, 28, 29. Right? Remember we would
Yeah.
joke, and I said that was going to be the my book. The
I thought that
problem
was
with
original though, Scott. That was
no,
gonna
no,
be your first chapter in your book,
I
20,
well,
and it was
or
already
the
sold.
only chapter. Because it's if you just keep it that simple, and I took this from Edward Topple, I believe, who wrote Zen in the Markets. I'm fairly certain it's in his book, and he says if you can just know that 27 is less than 28, that 28 or that 29 is more than 28, then you can invest in the market because the feedback from the market is really simple. If you paid 29 and the stock's 28, you're down on it, and if you paid 27 and the stock's 28, you're up on it, right? And
Yep.
so you really want to just let the market give you that feedback. And and I'll tell you, is because I have a lot of experience in the market, tremendous experience. I've sat in front of the markets and watched hours and hours of markets. They talk about 10,000 hours, Arusha. I probably have a million hours. I don't know. It's probably ridiculous.
You might be right, yeah.
But yeah, but that's not sometimes the more experience you have can actually start to hurt you because then you develop this sense of like, I know, this time it won't, I remember that one time that I took the loss and the stock came back, or I remember that one time I did this and that. And it can be to your detriment. So you have to really just learn to go with what the market's doing. And remember the US stock market, especially, like, we have clients all over the world, as you know, when you were with
Mhm.
us, and in the US, there are a zillion eyeballs on the US stock market, and they're all voting with their money. So, and it's sovereign wealth funds. The Swiss National Bank owns, like, a 5% position in Apple, and they own Nvidia. So all this money is either coming into these stocks or coming out of them, and they leave footprints, like Bill would say, elephants in a bathtub.
Yep.
And so you have to learn to respect that price action. It's not perfect. I get it. The market can give you some head fakes here and there, but in the end, if you're much better off in the long run, just kind of respecting the price action of the market versus what you think,
Yeah,
because
and
you're not gonna. It's gonna be very difficult to be bullish at the lows or bearish at the highs.
it's so true. And Scott, going back to something you mentioned earlier, where about previous experience, I saw, and I'm sure you saw this study too, but there was a study on when you started investing in the stock market, if it was during like a bear market or something, it was just that kind of first impression you had with a market. It was during a bear market, you were a little bit more naturally cautious for most of your investing life. But if you essentially grew up investing in a strong bull market, you much more aggressive and more optimistic and things like that. And I definitely can relate, because when I started, it was really like the 2000 bear market, and so those kind of impressions kind of leave. Those first impressions still have an effect on me sometimes. Where when the markets pull back, when you see that distribution, when you see some of the leading stocks break key support areas, immediately I'm thinking I have to protect money at all costs, which in many ways is a great rule to have, because I learned how to sell very quickly during bear markets. But sometimes I get a little too cautious by leaning on those initial memories of the market.
I definitely have that problem because between the 2000 top and the great financial crisis, I think, was the one that scarred me more, because the 2000 market was toys.com, and what was CMGI, which is an
Yeah.
incubator
Yeah,
for a
I'm
lot of.
talking about kind of like that whole 2000 to 2002 bear market kind of thing,
Yeah, well,
which was so long, right?
yeah, that was a pretty tough bear market for sure. But I think for me that it was the '08 one that
Okay.
was a little bit stronger, because it was the Citigroups and the GEs of the world, uh, uh, AIG.
Yeah.
These are like quote unquote real companies, and they're all in trouble, ready to go under. And so that one has weighed on me for a number of years. And I tend to have, a kind of a shoot first, ask questions later mentality, and get into protection mode much sooner than most people.
Which
But
isn't a bad thing to have,
I'm
but you
very
have to be
aware of
aware
it.
of it. Yeah.
Yes, thank you. It's funny, we are the same wavelength,
Yeah.
Arusha.
Yeah.
I'm aware of it. I know I have a tendency to get bearish faster than probably need be. So when I'm doing that, it's like I'm thinking, if I step outside myself and say, okay, Scott, this is how you're feeling. Remember, it doesn't matter how you feel. What's the market telling you?
And do you have any other kind of rules in addition to kind of those reminders? Like maybe have you institute any kind of rules that to try to keep you in a little bit longer than maybe your natural tendency might, force you to sell a little bit more?
I have. I've gotten a lot better at it. I'm not as good as, like, some people probably are, and as good as I'd like to be, but I have learned to kind of go with the flow more and accept. It's hard for me in size, so I tend
Yeah.
to reduce, but I can keep a 5% position of XYZ because it hasn't done anything wrong. But I want to sell it just because it's gone up a lot, and I love to ring the cash register. That's it's so much fun to buy something at 100 and sell it at 120,
Yeah.
So I have to fight that urge. And so if I don't allow myself, some process of selling some, then I'll make a mistake I found and sell it all in a weird moment. So I do allow myself to reduce.
But that does remind me of another lesson that we learned at those masters events when Bill spoke. He said for every big winner that you get, you should have sold another 3 or 4 stocks, meaning at 20%, meaning you should be taking most of your gains at 20 to 25%. Not everything is going to be a big winner and things like that, but maybe you have one, you have a lot of conviction in it, you really know the story, and you manage it well, and you get that big winner. But for the most part, you should be locking in a lot of your gains when you have that chance.
I agree. I find my experience with so many clients and people I've spoken to in markets is I had XYZ. I was up, so much and I gave it all back. Right. And I don't have that war story. I have the opposite war story. I was in NVIDIA, sold it at 600. Now it's 900. So, we all have our kind of personalities, but in honor of Bill and rules, one of Bill's famous sayings is rules, rules, rules. Is I for every 4 stocks that I have a profit on, that I'm profitable on, I force myself to pick one that I think could be a big winner, and I give that one much room, and I'm willing to let that one give back a lot of the gains if it does, because I'm going to take the profits like you mentioned, and the other 3. And this has helped me to stay the course. I'm not always going to pick the one that's going to continue up. That's another, everyone would love to know, show me which ones to sell up 20, 25% and which ones to keep.
Yeah.
Wouldn't we all love to know that? But you just got to kind of know based on, again, what would Bill say? Is that company changing the way we work, live, or play? What are the quarterly earnings like? Earnings, he absolutely loved earnings. We've talked about the Alibaba story, how we were all loaded up in Alibaba, and he was like, I don't really, where are the earnings? The earnings were pretty stagnant at that point. And we kind of all looked at each other at that event like, uh-oh. And he was right. This was really early in the Alibaba story, and we were
It
all
was right.
buying it.
It just came out, right? At
Yeah, it
that
was an
time.
IPO base. Yeah.
Yeah. I'm trying to
Yeah,
find it here
exactly.
on the
What
market
happened?
charts here.
It now it ultimately went a lot higher, but who would have been able to withstand the correction that it went through? I think it went down in half.
Yeah, maybe it was around here. It must have been like 2020, 2014, 2015 time, and the earnings line was going down, and so yeah, they pulled it up, and everyone was in it, as Scott said, but the only one who wasn't excited about it was Bill. And immediately, I think it was like that day on that Monday, the stock started selling off, which
Yes.
was kind of crazy.